Good morning. Today we will talk about consignment account when goods are sent at invoice price. When goods are sent at invoice price. Why the goods are sent at invoice price? Any idea? Can you just come out? Why the
So when we show bill, that's why sir, invoice price.
when
When bills are issued.
when we
When we issue bills, sir.
when we issue bills? Okay,
Yes, sir.
okay. Now the consigner, if he reveals the cost price of the goods, the consignee comes to know what's the profit made by, what's the percentage of the profit made by, what is the volume of the profit made by the consigner. And he may feel jealous about it. And if the consigner considers it to be confidential, okay, and he doesn't want to reveal the cost of the goods sent on consignment to the consignee, okay, because at a later stage he may demand a higher commission. So to avoid that, he may not reveal the cost of the goods. So what does he do? He will send at invoice price. He will send the goods at invoice price. What is this invoice price? It is a price higher than the cost price. Okay, and this is cost plus profit. Cost plus profit. Therefore, the difference between invoice price and the cost price is known as profit loaded. Profit loaded. Okay. Now, invoice price need not be same as that of the uh, selling price. It can be same, it need not be same. Okay, the invoice price, when it is calculated, when it is reported, okay, when you're reporting the expenses and incomes, how do you arrive at the profit when the goods are sent at invoice price? So this profit element is to be separated. This profit loaded should be separated, right? And that should be, removed, eliminated. Only then you will come to know what is the profit made. Okay, so therefore invoice price should be brought down to the cost price level. Okay, what is loading? What are the things that are loaded in the invoice price? It may be the opening stock, it may be the goods sent on consignment, or it may be goods returned by the consignee and the closing stock. Okay, and there are certain journal entries for this. There are certain journal entries for this. Okay, and these journal entries, we'll just have a quick glance on the journal entries. You will not immediately understand these things, but once we complete a problem, you will be able to understand. Okay, look at this. For goods sent on consignment, when goods are invoiced at cost, when goods are invoiced at invoice price. Okay, the comparison. This part is already discussed. This part is already discussed. Okay, the second part, when goods are sent on consignment, okay, consignment to goods sent on consignment. When it is invoiced, consignment debit to goods sent on consignment. Okay, now there is no adjustment entry in case if it is not invoiced, because there is no profit loaded, but there is an adjustment entry, okay, for the profit loaded. What is that? Goods sent on consignment debit to consignment account, meaning you are debiting the total amount of invoice price to the consignment account, and the profit loaded is credited to consignment account. Consignment account. Okay, now for goods returned by the consignee, goods sent on consignment account debit to consignment for the return. Okay, and the same is written here. Okay, but there is no profit loaded adjustment here because the goods are sent at cost. But when it comes to goods or invoiced, or goods are sent at invoice price, then you have to give an adjustment entry. Consignment account debit to goods sent on consignment account with the amount of profit loaded on the goods returned by the consignee. Okay, and for the opening stock, consignment to stock on consignment, it is the same here. Consignment to stock on consignment. There is no adjustment in case when the goods are sent at cost, but there is an adjustment. Stock reserved to consignment for removing the profit loaded. For removing the profit loaded. For closing stock, stock on consignment to consignment, which means it is credited to consignment account. Okay, and it is in both cases. But one more adjustment you will give, okay, in case if the goods are invoiced. What is that? Consignment account debit to stock reserve to remove the profit loaded. What is this profit loaded you're talking about, sir? We are not understanding. We are not clear about it. You will understand only when we take up a problem. Okay, we'll take up a problem and then you will be able to understand. You know, am I covering, is there anything covering the problem? Is the video covering the problem?
No, sir.
Okay, yeah. Can one of you read this? Mr. X, the consigner, consign goods. Should I read or?
I'll read, sir.
Yeah, read.
Mr. X, the consigner, consigned goods to Mr. Y, 100 radio sets valued 50,000.
Okay.
This was made by adding 25% on cost.
Hmm.
Mr. X paid 5,000 for freight and insurance. 20 sets are lost in transit, for which Mr. X recorded 5,000 from the insurance company.
Okay, X is the consigner. Goods sent on consignment, 50,000. Okay, and this is including a profit of 25% on the cost. It is invoice price, and he paid 5,000 for freight and insurance. Freight and insurance, direct expenses. Okay, to be part of goods. We added this up. We add this amount to calculate the value of this stock. 20 sets are lost. There's an abnormal loss. 20 sets are lost in transit, for which X recorded a 5,000 compensation damage from the insurance company. Okay, he got 5,000. Right? Okay, will you go ahead? Mr. Y received remaining goods in condition. He incurred 4,000 for freight and miscellaneous expenses. 4,000 is the direct expense. Okay, direct expense, non-recurring expense. So therefore, you will use this 4,000 to add it to the stock. 3,000 for go down rent. You don't consider this to calculate the value of the goods or stock. He sold 60 sets for 50,000. Show the necessary ledger account in the books of Mr. X, assuming that Mr. Y was entitled to an ordinary commission of 10% on sales and 5% on Dell credit commission on sales. He was also reported that 1,000 were proved bad. This is proved bad, but the spelling is wrong. 1,000 were proved bad. Okay, 1,000 turned bad rather. Okay, and what shall we do with this bad debts? What shall we do with this bad debt? Shall we provide for the bad debts? Shall we adjust this bad debt of 1,000? Yeah, there's an ordinary commission of 10% and there's an extraordinary commission. That's Dell credit commission. What is Dell credit commission? Once again, quick review. Dell credit commission is a commission paid to bear the risk of bad debts. When Dell credit commission is paid already, there's no need to adjust. It is the headache of the consignee. We don't need to record this 1,000 anywhere. It is his headache. Okay, it is his headache, right? So let's come to, we need to have some workings, will come one by one. 50,000 onwards will come, right? Yeah, 50,000. Now, number one, to calculate the profit loaded. What's the cost price? Let's assume the cost price is 100%. Cost price is 100%. Okay, cost plus 25 is invoice price. That is 125. Okay, the invoice price minus cost price gives you profit loaded, which is 25%. Clear? Right?
Yes, sir.
Now, yeah, 50,000 is the invoice price. If you want the cost price, what you have to do is 100 by 125, multiply this 50,000. 100 by 125 into 50,000 gives you the cost price. And that is 40,000. 40,000 is the cost price. 50,000 is the invoice price. So 40,000, okay, divided by 4 is 10,000, right? So if you add 10,000, that is 25%. If you add, it will become invoice price. 25% of 40,000 is 10,000. If you add 10,000, it will become 50,000. That's invoice price. Okay, now let's calculate what's the profit loaded. Profit loaded is equal to, therefore, 50,000 minus 40,000 gives you 10,000. This is the profit loaded on 100 sets. This is the profit loaded on 100 sets. And what's the profit loaded on per set? The 10,000 by 100. Okay, 10,000 by 100 gives you 100. And this is per set profit loaded. In each set, he has a profit of 100. That is profit loaded per set. Okay, now let's come to the valuation of goods lost in transit and closing stock. Total invoice price 50,000. That's what given here. Total invoice price 50,000. And he paid freight of 5,000. And 20 sets are lost in transit. Okay, 20 sets were lost in transit. Look at this. 50,000 is the invoice price, and the expenses of the consignor 5,000, just as I have shown you in the problem. So 50 plus 5, 55,000 is the worth of the 100 sets that are consigned. Okay, this is the worth of the 100 sets consigned. Okay, less goods damaged in the transit. What's the goods damaged? What's the value? So 20 sets were damaged. Okay, what's the worth of each set? 55,000 is the worth of 100 sets. Okay, 55,000 by 100 gives you per unit value of set. Okay, so 55,000 by 100 into 20 sets gives you the value of the 20 sets lost. That is 11,000 is the value of the radio sets damaged or lost. Okay, now add the non-recurring expenses or direct expenses of the consignee. The consignee here is Mr. Y. Add non-recurring expenses of Mr. Y. Now look at this one. This 11,000 is removed from 55,000 because these goods are lost. They are no more there. So 44,000 worth goods have arrived at the premises of Y, and while receiving, Y has spent 4,000 direct expenses, non-recurring expenses, one-time expenses. So 44 plus 4 gives you 48,000. So this is the worth of the 80 sets that he received. Out of 100, solid sets which are in good condition are 80. The worth of 80 sets is value of 80 sets is 48,000. Okay. out of this 48,000, come back. Out of this 48,000, okay, yeah, he sold, who sold? Y sold. Yeah, he sold 60 sets for 50,000. 60 sets for 50,000. Show the necessary ledger account in the books of consignor, the X. Okay, 60 sets are sold. How many sets are transported? 100. How many sets are damaged? 20. 100 minus 20, 80. Okay, 80 minus 60 which are sold. Okay, 20. 20 are leftover radio sets. 20 are leftover radio sets. Okay, right. If 48,000 is for 80 sets, and what is the if 48,000 is the value of 80 sets, what is the value of 20 sets? 20 by 80 into 48,000 gives you 12,000, which is the value of the unsold stock, 20 radio sets. Okay, please let me know if any confusion here. Is there any confusion? Okay, there's
No, sir.
Please stop me if you're not understanding anything at any point of time. Then loading on abnormal loss. Per unit profit loaded is 100 rupees. That's what we have calculated previously. And how many units are lost? Abnormal loss. Lost in transit, 20 units. So 20 into 100 per unit. This is the profit loaded. So 2000 is the loading on the abnormal loss. Profit loaded on abnormal loss is 2000. Okay, 2000. Next, stock surplus. 20 sets are left over. Okay, 20 sets are left over. In each set again, there is 100 rupees profit loaded, right? So on closing stock, on leftover stock, the profit loaded is 2000. Okay, 2000. You have to adjust these amounts, right? Then as I told you, there is no need to pay, adjust anything for bad debts. Why? Because the Dell credit commission, okay, to bear the risk of bad debts is already paid. There's no need to adjust the bad debts, right? Shall we start the solution? These are all the workings. Now please let me know if there are any confusion, intricacies that you find.
So can you once tell again, sir?
Now we go to the account, consignment account. Yeah, debit, credit. Okay, the first one is, look at this. There are four important entries. 2 goods sent on consignment, 2 bank, that is expenses of consignor, 2 Y, the consignee, all the amounts spent by the consignee. Okay, freight he spent, go down rent he spent for. 2 abnormal loss. Okay, 2 abnormal loss. Right? What is this? What is this? Profit loaded. 2 stock surplus. What is this? Profit loaded. I'll come back to these 2 points because these 2 are new to you. Okay, these 2 are new to you. Right. Then commission 5% on, 10% on 50,000, 5,000. Okay, 5,000. And extra commission to bear the risk of bad debts, 5% on 50,000, 2,500. Okay, now except these 2, you understood the remaining. We have been taking the goods sent on consignment, expenses of consignor, expenses of consignee, commission to consignee, and additional commission to consignee. We know all these things. Now on the credit side, we know, okay, buy closing stock, okay, buy closing stock, and buy abnormal loss, right? And buy consignee sales. Look at this, buy consignee sales 50,000. By abnormal loss, we already have the practice of taking this abnormal loss on the credit. Buy stock on consignment. Stock on consignment. Okay, 12,000. Now, there is one addition that you see, 10,000. What is this? Buy goods sent on consignment account, 10,000. And what is this? Two goods sent on consignment account. Two goods sent on consignment account is 50,000. And in this 50,000, 10,000 is profit loaded. That profit loaded is removed by making a contra entry, opposite entry. By taking an opposite entry, okay, with the same wordings, you're eliminating the profit loaded. Similarly, abnormal loss, you have taken 11,000 and there's a profit loaded here also, 2,000. That 2,000 you're writing, okay, here, or you're eliminating by taking an opposite entry. What is that? 2 abnormal loss. Here you're writing by abnormal loss. This is a total loss. In this, 2,000 is the profit loaded. That profit loaded is removed by taking a contra entry, 2 abnormal loss. In bracket, profit loaded, 2,000. And likewise, there is profit loaded in closing stock, 12,000. 12,000 is a closing stock, but there's 2,000 profit loaded. What do you do to remove that? Eliminate that profit loaded. You will take opposite entry to stock, the unsold stock or stock surplus, 2,000. Look at this. When you write here, you will get the exact stock value, that is 10,000. When you take the opposite entry of 2,000, you will get exact amount of abnormal loss, that's 9,000. Right? Did you understand this? Any confusion? Please let me know. This is the invoice which is including profit. So I'm writing a contra entry, okay, contra entry with the profit loaded. And same thing I'm doing for abnormal loss and closing stock, that is stock on consignment. And only then I'll come to know the real profit. That is 9,500 is the profit on consignment. Profit on consignment, which is transferred to the profit and loss account. Okay, and this is known only to the consignor, that is Mr. X. It is only in the books of consignor. Okay, not in the books of consignee. It is not even known to consignee. Look at the consignees. Okay, consignee's account. Now look at this. In the books of consignor, don't get confused. This Y limited is in the books of consignor. Okay, this Y limited, which is consignee account, is in the books of consignor. So consignee sales 40,000. Consignee sales 40,000. Okay, sale proceeds. Sale proceeds. Okay. One second. Yeah, abnormal loss account we'll just look into. Okay, consignees account we will look into later on. Okay, abnormal loss account. Abnormal loss account debit to consignment 11,000. By consignment account, that is profit loaded 2,000. There's an insurance claim of 5,000, right? The remaining is transferred to profit and loss account. Loss is transferred to the profit and loss account. Okay. Now this account is, these figures are wrongly entered. When it is taken the figures, it is